Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at AST SpaceMobile.
If you find our talks useful, please consider subscribe, like, and comment underneath. So, I want you to imagine standing in the absolute middle of nowhere.
Like, truly off the grid.
Right, exactly. You are on a boat in the dead center of the Pacific Ocean. Or maybe you're hiking in a super remote mountain range, hundreds of miles from the nearest cell tower.
Yeah, normally you're just totally disconnected out there.
Exactly. But you reach into your pocket, pull out your normal, everyday smartphone, and you just stream a high-definition video.
Without any crazy gear.
None. No bulky satellite dish. You don't have to bolt some expensive specialized hardware to the roof of your cabin. It is just the exact same phone you use at the grocery store, and it connects directly to a satellite orbiting the Earth at 17,000 miles per hour.
Which is wild, because the underlying physics of that scenario usually demand heavy, specialized gear. I mean, for decades, the assumption has been that the further you get from terrestrial infrastructure, well, the larger your antenna needs to be just to catch a signal.
Right, but that is the exact technological barrier we are breaking down today. We are examining AST SpaceMobile, and looking at the data from mid-March of 2026, we are tracking their transition from a highly speculative pre-revenue venture into an actual commercial entity that is generating real capital.
And to understand the massive financial upside the market is pricing in right now, plus the white-knuckle risks, we have to look at the inflection point where the research shifted into commercial reality.
Going from a sci-fi concept to a real product means checking the balance sheet. And the numbers from 2025 demonstrate a fundamental change in their business model.
Oh, absolutely. The revenue jump is massive.
Yeah, their full-year revenue for 2025 came in at $70.9 million. Which is just crazy when you realize 2024 was a mere 1.9 million.
Sure. It is a staggering difference year over year, and, the distribution of that capital is critical too.
Right. Q4 was the big one.
Exactly. Q4 of 2025 alone accounted for 54.3 million of that total. That represents a 37.7% surge in just 3 months. They completely crushed analyst expectations.
Driven mostly by initial engagements with mobile network operators and secured contracts with the U.S. government, right?
Yeah, exactly. But the financials are complex because, well, looking at their bottom line, they are still operating at a loss.
Right. They reported a loss of 26 cents per share in the recent quarter.
Yeah. But despite that negative earnings per share, investors handed them a $3.5 billion capital raise in 2025.
Which is huge. Why are institutional investors injecting billions of dollars into an operation that is still losing money on a per-share basis?
Because in the space infrastructure sector, you aren't valuing the company based on its current profit margins. You are valuing its runway to complete a monopoly-scale project.
Ah, so it's survival versus deployment.
Right. That $3.5 billion capital raise solves their immediate solvency problem. It shifts the company entirely out of survival mode and funds the highly capital-intensive rollout of their Bluebird constellation.
So they're using that capital to manufacture the next generation Block 2 satellite.
Yeah, and to build out the necessary terrestrial infrastructure, which includes 15 ground gateways distributed across 5 continents.
Okay, so the capital raise buys them the runway, but it immediately introduces an engineering problem. To justify that valuation, they can't just launch standard communication satellites.
No, they have to deploy something fundamentally different.
Let's look at their proprietary direct-to-device, or DTD, broadband tech. The data directly contrasts AST SpaceMobile with SpaceX's Starlink.
Right, because Starlink requires users to purchase a dish.
Exactly. A dish that acts as a middleman between the satellite and your local network.
Yeah.
But AST SpaceMobile is building a space-based cellular network accessible by standard, unmodified smartphones. How exactly are they bypassing the need for a dish?
It comes down to where you place the processing burden. Usually, satellites beam down a relatively weak signal, which is why your house needs a large powered dish to catch it and amplify it.
Okay.
AST reverses that dynamic.
Wow.
They put the massive, complex antenna in space. The Bluebird satellites unfurl a phased array antenna the size of a tennis court in low Earth orbit.
Wait, really? A tennis court in space?
Yeah. And because the antenna in space is so massively sensitive, your phone's tiny standard internal antenna doesn't have to do the heavy lifting. The satellite is sensitive enough to catch the faint transmission from a standard mobile device.
Which means the friction for user adoption basically drops to zero.
Exactly.
If you don't have to convince a customer to buy and install a $500 piece of hardware, your total addressable market instantly becomes anyone on Earth who already owns a smartphone.
And that is a market of billions of devices. Furthermore, there are immense software hurdles they've had to clear to make this work.
Like what?
Well, when a satellite is moving overhead at orbital speeds, the frequency of the radio waves compresses as it approaches and stretches as it moves away.
Ah, like the Doppler effect.
Exactly, identical to how a police siren changes pitch as it drives past you. A standard smartphone is definitely not programmed to understand a cellular signal that is constantly shifting pitch.
So how do they fix that?
AST software pre-compensates for that Doppler shift from space. It essentially tricks your unmodified phone into thinking it is talking to a stationary cell tower just a few miles down the road.
That technical achievement is impressive, and the industry is clearly taking it seriously, considering they currently sit on a $1.2 billion contracted backlog.
Yeah, they have secured strategic partnerships with over 50 telecom partners globally.
Right, including major players like TELUS in Canada and Orange in Romania. Plus, they secured a $30 million deal with the U.S. Space Development Agency for military communications.
It's a massive footprint.
But let me push back on the business strategy for a second. Global telecom is a notoriously guarded, cutthroat industry. If AST holds the keys to this global, borderless network, what stops them from eventually cutting out carriers like TELUS or Orange entirely?
You mean just going direct to consumer once they have a monopoly in space?
Yeah, why not just bypass the old giants?
That is a common concern when looking at disruptive tech, but it misunderstands the regulatory environment of telecommunications. AST SpaceMobile does not own the cellular spectrum.
The actual radio frequencies.
Right. Spectrum is strictly regulated and auctioned off by national governments. Companies like AT&T, TELUS, and Orange spend tens of billions of dollars to own the exclusive rights to broadcast on those frequencies in their respective countries.
Ah, so AST physically needs the mobile network operators' spectrum licenses to operate legally.
Exactly. They act as a roaming partner in space, broadcasting on the spectrum that their partners already own.
But surely, with billions of dollars in backing, AST could eventually just bid on their own spectrum licenses and bypass the carriers?
In theory, yes. In practice, spectrum auctions cost tens of billions of dollars per country. A $3.5 billion capital raise does not even give you a seat at the table to buy national spectrum rights across the US, Europe, and Asia.
Plus, I imagine governments are highly protective of their local telecom infrastructure.
Exactly. By partnering with over 50 established operators, AST leverages the political and regulatory goodwill those companies have spent decades building.
So it is mutual dependence. The operators keep their spectrum rights and their customers, and in exchange, AST provides a premium service that plugs all the dead zones.
This creates a concept called ecosystem lock-in. Once an operator integrates AST's connectivity into their network architecture, they can guarantee their customers will never lose a signal.
And if an operator provides that level of reliability, the switching costs for the consumer become incredibly high.
Oh, for sure. A customer will not switch to a rival network if it means losing satellite coverage the second they drive out of town. Once AST is baked into the infrastructure, it becomes virtually impossible for the operator to rip it out.
That structural advantage really helps explain why Wall Street is reacting the way it is in mid-March of 2026. The market momentum is aggressive.
Very aggressive.
Looking at recent price action, the stock experienced back-to-back daily jumps of 6.39% and 6.63%. Analysts are setting steep price targets, with one pointing as high as $139.
And we are seeing heavy trading volume, ranking 139th overall in a recent session. Plus, there's significant unusual options activity.
Which is a huge indicator. The way I think about options activity is it's like watching massive container ships navigate through a busy harbor.
Oh, I like that analogy.
Yeah, you might not be able to see the hedge fund managers or the institutional buyers directly in the wheelhouse, but you can see the massive wake their ships leave in the water.
And that wake forces all the smaller boats to adjust.
Right, the retail investors and market makers have to shift their positions. Heavy options volume is the wake left by institutional capital moving into a trade.
That perfectly illustrates the mechanics. Market makers who sell those call options are forced to buy the underlying stock to hedge their own risk, which creates a feedback loop of upward price pressure.
So it's essentially a self-fulfilling surge.
Yeah. What we are observing is a strong correlation with broader risk appetite. Institutional money is hunting for the next massive infrastructure play, and global connectivity totally fits their criteria for a high-growth sector.
We also see Seeking Alpha upgrading the stock to a buy, explicitly labeling 2026 a game-changing year. And there's an interesting speculative catalyst regarding the new Roundhill Space ETF.
Right, the ETF factor.
How does a single ETF launching actually move the needle for a company of this size?
Well, it creates a mechanical floor under the stock. Exchange-traded funds are typically rules-based. If the Roundhill Space ETF defines its parameters to hold the top space infrastructure companies by market capitalization, the fund's algorithm is forced to buy shares of AST SpaceMobile.
Regardless of what the stock is trading at that day.
Correct. The algorithm doesn't care about the daily news cycle or market sentiment. If retail investors buy shares of the ETF must proportionally buy shares of the underlying companies.
So if AST becomes a top holding, it benefits from a constant passive stream of buying pressure simply because the fund is growing.
Exactly.
Okay, so the institutional positioning is clear and the financial runway is secured. But we have to confront the valuation here because the expectations placed on this company are astronomical.
Oh, they're entirely priced for perfection.
AST is currently trading at 147 times forward revenue. To put that into perspective, trading at 147 times trailing revenue money they have already made would be aggressively high. Trading at 147 times forward revenue means the market is pricing in money the company has not even earned yet.
A multiple that's steep leaves zero margin for error. The market is not hoping for success, it is demanding flawless execution on a highly compressed timeline.
Which brings us to the bear case and the 2026 catalyst calendar. The primary hurdle to justify this valuation is the deployment of their Block 2 satellites.
Their target is to have 45 to 60 satellites operational in orbit by the end of 2026.
They also have crucial Q1 2026 earnings approaching in May, and they must secure ongoing FCC spectrum authorizations. But if we look at the realities of aerospace engineering, what happens if a rocket gets delayed on the launch pad for 6 months due to weather or technical issues?
That is the binary risk of space investment. You are entirely at the mercy of the launch providers. If a launch slips from Q4 2026 into 2027, the revenue projections pushed forward by analysts are immediately invalidated.
Which would trigger a severe sell-off.
Very likely, yeah.
Well,
but the launch itself is only the first hurdle.
Right, because once they are in orbit, they still have to unfurl that massive antenna.
The mechanical complexity of folding an antenna the size of a tennis court into a rocket fairing, surviving the violent vibrations of launch, and then successfully deploying it in the vacuum of space is immense.
If a single mechanical joint fails to lock into place,
or if a software glitch prevents the phased array from orienting correctly, you suddenly have a multi-million-dollar piece of space debris instead of a telecommunications node.
Wow. And beyond the hardware risks, you mentioned the FCC spectrum authorizations. Why is regulatory approval considered a major catalyst rather than just a rubber stamp?
Because broadcasting cellular signals from space fundamentally alters the radio frequency environment. Terrestrial telecom companies are highly protective of their spectrum.
Right, they don't want interference messing up their ground networks.
Exactly. The FCC must ensure that a satellite beaming a signal from 300 miles up does not raise the noise floor for users on the ground.
If AST satellites cause interference with existing cell towers, dropping calls for users who aren't even using the satellite service,
the regulatory blowback would be immediate. They have to prove mathematically and practically that their space-based transmissions seamlessly integrate without disrupting legacy networks.
And while they are fighting gravity, engineering constraints, and regulatory bodies, they are also dealing with SpaceX. Elon Musk is aggressively pushing Starlink's own direct-to-device solutions.
Yeah, the SpaceX threat is the most common argument in the bear case.
Because if SpaceX manages to accelerate their deployment, AST could face severe market share compression before their constellation is even fully operational.
And remember, SpaceX owns the launch vehicles, which means they dictate their own launch cadence. They do not have to wait in line to buy space on someone else's rocket.
It really seems like a race between launch cadence and regulatory capture. SpaceX can put hardware into orbit faster, but as we discussed, AST has already locked down the actual terrestrial networks and the roaming agreements with the operators who own the spectrum.
That is the dynamic investors are weighing. Can AST deploy enough infrastructure in 2026 to activate those 50-plus operator agreements before a competitor develops a viable workaround to the spectrum problem?
Synthesizing the financial analyses, the technical data, and the market sentiment, the overall consensus gives AST SpaceMobile a bullish score of 8 out of 10. Management's estimates suggest they are on a trajectory to hit $1 billion in revenue by 2027, assuming the constellation fully scales.
However, The critical takeaway from all this data is that this is fundamentally a multi-year hold. It requires investor patience to weather the volatility of this 2026 deployment phase.
Because the entire investment thesis hinges on executing the most difficult part of the mission over the next several months.
Exactly.
Whether you are evaluating that 8 out of 10 bullish score from an investment perspective, or you're just a technology observer analyzing the engineering, this infrastructure rollout represents a structural shift in how data moves around the globe. We're examining the mechanics of a world where the concept of a dead zone just ceases to exist.
And the elimination of geographical barriers to information access has implications that extend way beyond telecom revenues. It alters emergency response, remote industry, global supply chain tracking.
It also introduces profound geopolitical questions. Think about the commercial applications, and then take that technology to its logical conclusion.
You mean regarding censorship?
Yeah. If citizens in oppressive regimes can suddenly connect to a borderless, space-based internet using a standard, unmodified smartphone, how does that fundamentally alter global geopolitics?
It's a huge question. If an authoritarian government can no longer control the flow of information by simply shutting off the local cell towers, the balance of power shifts entirely.
A direct, invisible line to the rest of the world, just sitting in the pocket of an average citizen. It is a technology that effectively rewrites borders.
It forces a reckoning for any entity that relies on geographic isolation to maintain control.
It's a technological leap with consequences we are only beginning to map out. Thank you for joining us on this talk. Keep questioning the consensus, keep exploring the data, and we'll catch you on the next one.